It's 10 a.m. in Lagos, Nigeria. Good morning and welcome to Business Morning here on Channels Television. I'm Ini John Mekwa. Let's do Friday business. We begin from the grain space. U.S. soybean futures extended gains on Friday to hit the highest level in nearly 6 weeks on yield concerns after forecasts signal more dry weather in portions of the Midwest crop belt. U.S. corn and wheat futures also extended Thursday's rally on the yield concerns. A stretch of dry weather following planting season has stressed crops across U.S. Midwest, raising concerns that the forecast record corn and soybean harvest will fall below expectations. The U.S. Agriculture Department said that just 59% of the U.S. soybean crop was rated good to excellent as of June 11, the lowest for mid-June since 2008. The most active soybean contracts on the Chicago Board of Trade was down 0.65% at $14.37 for a quarter of a bushel after rising to $14.38 for a quarter earlier in the day. The U.S. soybean crush in May topped most trade estimates and rose to the highest level for the 5th month of the year, according to National Oilseed Processors Association. Still staying in the global space now, but let's go to oil and see that oil prices were set for a snap of a 2-week losing streak on Friday amid optimism about higher energy demand from top crude importer China, as well as weaker dollar. Brent futures rose 20 cents, that's 0.3%, to $75.87 a barrel, while U.S. West Texas Intermediate crude was 16 cents higher, that's 0.2%, at $70.78 a barrel. Both benchmarks surged about 3% during the prior season. Data on Thursday showed that China's oil refinery throughput rose 15.4% in May from a year earlier, hitting its second highest total on record. Chinese demand for oil is expected to keep climbing at an assured rate during the second half of the year. In the United States, data released on Thursday shows retail sales unexpectedly rose in May, along with higher than expected jobless claims last week. The dollar fell to a 5-week low versus a basket of other currencies. A weaker dollar makes oil cheaper for holders of other currencies, which could boost demand. Analysts also expect voluntary crude output cuts implemented in May by the Organization of Petroleum Exporting Countries and its ally, that's OPEC Plus, to support prices. Still, a weak economic outlook looms over market sentiment as China's industrial output and retail sales growth in May missed forecasts. Edible oil, now Malaysian palm oil futures soared more than 6% on Friday as dry weather curbed prospect of palm and U.S. soybean production, setting the contract up for a sharp weekly jump. The benchmark palm oil contract for September delivery on the Bursa Malaysia Derivatives Exchange gained 216 ringgit, that's about 6.13%, to 3,723 ringgit, $806.54. That's what it comes to a metric ton during early trade. Palm oil estate in Sabah, Malaysia's largest producing state of the commodity, experiencing water stress from early signs of El Nino cutting yields and exacerbating the impact of under-fertilizing and labor shortages seen over the past 3 years. A stretch of dry weather following planting season has stressed crops across the U.S. Midwest, raising concerns that the forecast record corn and soybean harvest will fall below expectations. Now, at the fundamentals, exports of Malaysian palm oil products for June the 1st to 15th fell 16.6% from the same week in May. Cargo surveyor Intertech Testing Services has observed this. Another cargo surveyor said that exports fell 16.4%. Dalian's most active soybean contracts jumped 4.5%, while its palm oil contract gained 5.4%. Soy oil prices on the Chicago Board of Trade rose 1.1%, following a 4.4% overnight surge. Palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils markets. Let's come to Nigeria now. The Norwegian Investment Fund for Developing Countries, Norfund, has expressed its desire to increase its investment portfolio in the Nigerian market. Norfund, which has a mandate to assist in developing sustainable businesses and industries in developing countries, is currently operating in 3 continents: Central America, Southeast Asia, and Africa.
Norfund, the Norwegian Investment Fund for Developing Countries, is an active investor assisting in building businesses in the private sector to help drive sustainable growth. And this forum is to spotlight Norfund's desire to increase its investment portfolio in Nigeria, a country of key importance to the fund.
It's about all of you present now in this room. It's the whole ecosystem that can really make us succeed in really making Nigeria and maybe the key country that we do invest in here in Africa. That would be fantastic.
Renewable energy, financial inclusion, green infrastructure and scalable enterprises in agriculture and manufacturing are the key investment areas for Norfund, and which also influence the fund's decision on the type of companies to invest in.
What do we bring to the companies and partners we invest in? I'd like to say, first of all, we bring patient capital, just by nature of the capital we have and the fact that it's essentially one investor, Norway's Ministry of Foreign Affairs.
Nigeria is Norway's most important market on the African continent. Our sector focus is well aligned with Norfund's investment mandate, and we are especially happy that 2 great investments will be announced here today in the agribusiness and recycling sector.
As part of the fund's commitment to Nigeria, 2 investment deals worth $12 million and $2 million are signed with OH Ecosystems and Recyclers. The forum ends with a panel session on creating value in challenging markets with companies that have benefited from Norfund.
Nigeria is a huge market. So if you think of the West African region and how we can drive development through investments in the private sector all across Nigeria, I don't think there's any single country where we expect to see as many investable businesses for us, just based on scale.
What we get back when we invest is if we create jobs and we create sustainable businesses, sustainable when it comes to financial, social, environmental, then that is really how we measure our success.
Norfund is owned and funded by the Norwegian government as a tool for strengthening the private sector in developing countries, driving development, and reducing poverty.
Well, moving on the program now, the President Bola Tinubu, has been very, very busy. And one of the things he's done is to sign the Electricity Act. And that Electricity Act is supposed to consolidate all legislations that handle electricity supply industry to provide an inclusive and ideal institutional framework to control the post-privatization phase of the Nigerian electricity supply industry and encourage private sector investment in the states. Needless to say, states are now involved. Well, there's also supposed to be a demonopolization of the Nigeria's electricity generation, transmission, and distribution at the national level to empower states, companies, individuals generate and transmit and distribute electricity in the country. Well, who best to discuss this but a scholar in electricity law in Africa, Professor Yemi Oke, joins us virtually. Professor Oke, good morning and thank you for your time. I know you must have been excited when we saw the president sign this, shortly following former presidents also, signing it and getting electricity out of the exclusive lists.
Thank you very much. Indeed, I've been very excited, and I'm happy for myself. I'm happy for Nigeria and Nigerians. I've received a lot of congratulatory messages as if it was personally made for me. But it's been decades of consistency in terms of advocacy. And let me publicly acknowledge that now we have a document that will work and that should work. For us in the power sector. I acknowledge the fact that not all, most of our suggestions, our issues, the inadequacies in the now repealed Electric Power Sector Reform Act have been taken care of in the new Electricity Act. Starting from the nomenclature, we argued that the Nigerian Electric Power Sector Reform Act was not a piece of legislation meant to operationalize the sector. So now we have not a law to reform, but a law now to operationalize the sector. Two, the new act takes care of NISE, what we call Nigerian Electricity Supply Industry, holistic approach to sector regulation. We're looking at now the law effectively, on paper though, regulates generation, transmission, supply, trading, enforcement, consumer protection, consumer rights and obligation, because once you have a right, there will be obligations that will go with it. The law now brings about a kind of holistic, integrated regime in the power sector. Of course, it promotes development of a very competitive electricity market, which is key. In line with the constitutional amendment, it brings off states to make laws in respect of every aspect of the electricity supply in Nigerian electricity supply industry. So it's a welcome development. But one thing I want to point out, no leader brings about a change. The leader is meant to take a lead and provide a kind of leadership. Nigerians are the ones to operate and operationalize this law. We are the ones to put life, meaning, and purpose to this piece of legislation to work for all of us to make Nigeria a better country. There are a number of issues I'm not too comfortable with in the law. Of course, I'll admit there's no perfect law anywhere in the world. There will always be room for improvement, and we keep adding values, improving the law, the system through regulation, through policy direction, through implementation, through ingenious management and regulatory approaches. I'm not too comfortable with the retention of NEMCO. NEMCO is Electricity Liability Management Company, because it connotes an impression that what was given to Nigeria was a kind of liability, because Nigeria didn't quite make money from the power sector privatization. We all admit that. But NEMCO now should, the way I say it, the way I've argued, NEMCO now should be restructured as a kind of something similar to what we have in the NDIC, Nigerian Deposit Insurance Corporation. NEMCO now should transform into a kind of bulk insurer to mitigate failures, business failures in the power sector. I'm also not comfortable with the retention of NBET, Nigerian Bulk Electricity Trading Company. I envisage a situation in which, now that we are going to the competitive stage, the NBET, of course, should be get done away with. NBET should also be restructured. Something similar to what we have under Petroleum Industry Act. When NNPC, old NNPC, is now NNPC Limited, NBET should not be a business player, a bulk trader, buying and selling and dealing with all aspects of electricity. That is not seen immediately in the law. But I acknowledge the fact that we have NEPTIN, which is now Nigerian Electricity, the National Power Training Institute, which is to train manpower for the power sector. That's commendable. Of course, I had argued that we can't be having MEMSA. MEMSA is not being integrated into the law. that's Nigerian Electricity Management Agency. So a lot of innovative things, extensive framework in terms of renewables. Of course, I'm still not comfortable that we still have rural electrification, rural electrification agency, a rural electrification fund in the law as a federal entity. No, I will have rather a situation in which we have rural electrification being ceded off completely to state government to deal with it, being closer and closest to the rural.
All right,
by
Prof.
and large, we've seen in of legislation, and our challenge as a people is to make it work. As industry players, we should make it work.
All right, Prof.
Then we continue to show leadership.
So I didn't hear you talk about this. One fear that has been expressed is the issue of double regulator, because the law now empowers states that have passed the electricity market laws. Actually, they can now give licenses. Obviously, the state will also follow up with those licenses. It will be a form of revenue generation. There will be regulation coming from the state. And you still have the NERC also as a regulator. So some people are afraid that there might be multiple regulations, just like we are having the issue of multiple taxation, and that might also come into play here.
Thank you. I acknowledge that fact. I wasn't going to, of course, immediately make that. I wouldn't want to talk about scary images or amplify scary components of the new electricity act. As I said, good way to start. We have a lot that we work to operationalize the industry. Of course, we still have areas for improvement, one of which is what you just mentioned, that we have dual regulation, what I call regulatory surplusage. On the one hand, we have NRC being retained to continually regulate the sector, particularly for states that have not developed or enacted their own legal framework. And I felt that was needless. One, because all states in Nigeria will eventually have a piece of legislation, however imperfect those may be, to regulate the electricity sector in their respective states. So, giving NERC powers as a kind of interim regulator for states that have not enacted their laws, to me, is needless. But that's not something to worry about, because I want to assume that, of course, as we've been saying for 1 and 2 decades, every state in Nigeria will eventually have a piece of legislation, even adopting existing ones from some states and changing names. Of course, we have in Lagos already, we have in Ondo, we have in Edo, and a lot of other states are. I think we also have something in Kaduna. Most states now, I'm being optimistic, will, in a matter of months,
Well, looks like the bandwidth of Professor Oke is not so strong at this time. We do hope that we can have him back to conclude this conversation, because one of those areas that actually we would like for Professor Oke to clarify would be the act stating that anyone may construct, own, or operate an undertaking for generating electricity not exceeding 1 megawatt in aggregate at site. A lot of people would say, well, a lot of Nigerians are already generating their own electricity at this time. So what's the implication of this, so that also it doesn't get abused? As we know, in Nigeria, we can all fist on one thing and make it lose the value it was supposed to have. So I believe, I don't know if we have Professor Oke back. Professor Oke, can you hear me now?
I'm here.
All right.
I'm here. I can hear you.
Okay, Prof, we lost you for a bit now, but let me just ask this. The Act states that anyone may construct, own, or operate an undertaking for generating electricity not exceeding 1 megawatt in aggregate at a site. What does this mean, and what's the implication of this to individuals?
ordinarily, even under the old law, if you can generate less than 1 megawatt without a license. If you generate less than a megawatt, you don't actually need a license. But now you can generate, but you may not be able to distribute, meaning you may not be able to trade with what you are generating without a license. Is to create a kind of a sanity in the system and avoid a situation which we have powerful individuals, those who are well-to-do, generating as much as 2 megawatts and connecting all kinds of homes and communities and trading, because you can't actually go into generation, transmission, or trading in electricity without license. Licenses now from state government, essentially the state in that area, or from the NR, from the federal government. So is to regulate it. But we've always had a situation in which individual, particularly corporate entities, were allowed to generate less than 1 megawatt. I'm sure a lot of people are not aware that it's only when you generate in excess of 1 megawatt that you need electricity licenses. My own approach now is that then what we argued before was that NERC should not bother itself with licensing less than 5 megawatts. But now, as the current law stands, states can license all kinds of megawatt generation.
All right.
From grid-based or.
Okay, so now what it means is that states should have very active, I don't know to call it energy or electricity ministry, but now there's the fear of bureaucracy in getting these licenses, because we do know that a lot of entrepreneurs who will gladly delve into this as a form of business, business operating, provide electricity and make their own profits and revenue out of it. But the issue of bureaucracy, because we see it with land, someone buys a land years after, they're still trying to get the CFO, from the state government. So how do you see these being simplified so that we can actually benefit from this law and get individuals or corporates, get into this business, provide electricity for more economic activities, and also, or even provide employment on their own side?
Thank you. I see two things happening. One, I see states now taking steps to have an efficient regulatory framework in place. And I see states reaching out to industry experts to man strategic positions to get things done, like we have in the private sector. I see states trying to do away with needless bureaucracies for this kind of very sensitive sector, because it's not state that is going to be investing directly. States are supposed or are expected to provide necessary and logistic support to attract investors. And an average investor is in a hurry. Once they invest, they want to start recouping their investment yield. So it can't be the usual thing. The electricity power sector is serious business, but it takes a lot of money. I don't expect states to stifle progress or development of growth in their respective power sectors through needless bureaucracies. I assume that we're going to start to deal with those bureaucracies so that we can have a business approach to power sector regulation at the level of state. Because if you're not doing so in your state, the neighboring state is going to take an advantage of that. And a state may generate electricity. For instance, for your state, if Lagos is not ready, or your state may license and free up the needless bureaucracies and get approval from NERC to transmit or distribute across states, because the law says if you generate in your state, fine. But if you need to step from one state to the other, then the NERC will be involved in that. So we're going to see a lot of that. Of course, we're also going to see bulk trading. Some states are going to bulk trade in the power sector, meaning like we're going to have serious players being able to generate sufficient megawatts and doing the distribution for business purposes.
All right.
The sector is going to be very active as state level.
Yeah, we look
the
for.
law really provides that enablement.
We look forward to that, Prof. We really look forward to that because we know electricity has been a bane of Nigeria's industrialization for many decades before now. Thank you so much for your time this morning and sharing your thoughts with us on this electricity law. Professor Yemi Oke is a scholar in electricity law in Africa.
Thanks for having me.
Let's take a break now. When we come back, I told you the president has been busy. There's the data protection law. What is it about? How does it affect you? That's our next conversation after the break. Do stay with us. Welcome back to Watching Business Morning here on Channels Television. It was on Wednesday that President Bola Ahmed Tinubu signed the Nigeria Data Protection Bill 2023 into law. It's been described as a massive leap forward in the global data race. Well, we know that one of the promises, the campaign promises of the president was also on digital economy. So we shouldn't be surprised, but I guess some people believe it's coming early and it's good. So we have joining us now for this conversation, Chizi Oti, Associate at Strain and Bland Partners, joins us virtually to have this conversation. Hi, Chizi, good morning. Great. So this is a very interesting one, especially for the Gen Zs, the new generation and all of that. So help us to understand, breaking down this law to anybody who can understand, what is this about? We've been talking about data protection even before now. What is special about this?
So understanding that we're in a time and age where everything is digital. And previously you could have to go to the supermarket to maybe shop, or you have to go walk in store. But now everything is done at your comfort, from your phones, on the internet. So with that, you're putting your information out there. It means data is going out. Data is like gold now. People are mining data, people are processing data. So the Data Protection Act gives everyone confidence that, okay, despite the fact that we know you're putting your data out there, you can be assured that your data is going to be processed correctly, that there is security for your data, and you have the right to hold your data processors, to hold them to responsible for whatever actions or breach of data. So it's like a security that they are protected, your data is good to go, and you could carry on business even as a business owner in Nigeria, knowing that the laws are in place. So the Data Protection Act is, like you said, it's in a Gen Z period. It's a good breakthrough. It's a beautiful one.
So help us to understand the definitions. For instance, you talked about data processors. Who are they? What can I call my personal data? Is it my name? Is it my phone number? Is it my account details? What makes up these important features in this law?
All right. Data for me to say, my individual data, you're either trying to either sending promotional messages, you're sending messages of your products, you're sending newsletters, or whatever the case it might be. So data processors are people who actually process the data. So they may be also data controllers. That means they are the ones who receive the data, but you could also be the one receiving and not the one processing the data. So that one makes the difference between a data controller and a data processor. Now, your personal data is any identifier, any information that can identify you. It could be physiological, it could be psychological, it could be medical, it could be your name, it could be your card number, it could be genetic, it could be anything. Once that information can be used to identify you as a natural person, then it's your personal data. And then once you give that personal data, perhaps you put your name down somewhere, or you log into an app or a website, your location data is put into that place, your name is put into that place, then that person who receives it becomes a data controller. Then if the person is going to further, as a result of that information they take from you, provide you some sort of service and maybe have to put in their records and process it, then that person becomes a data processor.
All right, so what are the penalties and the processes to get succor, for instance, if I feel that my rights has been infringed upon based on this law?
The very innovative part of the law is that it establishes the Nigerian Data Protection Commission. And that commission is tasked with the responsibility to take on matters of data violation, data breach, data violation that any data subject might feel. So if you as a data subject, an individual, have your data right being violated, you have the right to go to the commission, to report the matter to the commission, and then they will conduct an investigation into it. And once, maybe upon the conclusion of the investigation, they realize that, oh yes, there was a violation of the data right of the data subject, then there are like different options. They could either ask the data processor to compensate the data subject for whatever violation that might have taken place, especially where it has led to perhaps loss in monetary loss or some sort of harm or hurt or damages. Now, where they do not ask them to pay or compensate the data subjects, they could also be asked, the data processors could be asked to show profit they have made as a result of that violation. So they have to declare profit they have made as a result of the violation of the data subject. Or when it comes to monetary penalties, the commission can decide to issue certain penalties. And these penalties are dependent on the category in which those data processors fall into. So the Data Protection Act now creates for data processors of major importance and data processors other than data processors of major importance. So where it's a data processor of major importance, then the fine is going to be 10 million naira or 2% of the gross revenue of the previous financial year of that organization, whichever is higher. But where it's a data processor other than the data processor or major importance, then it's going to be 2 million naira or 2% of the annual gross revenue of the previous financial year of that organization, whichever is higher also. So you know that as a data subject, you can actually approach the commission where you feel that perhaps your data right is likely to be infringed upon or it has been infringed upon, and then you are sure that there is some sort of compensation to you or there's some sort of penalty to the data processor or controller if they're found guilty.
Well, I hope people will not get very busy trying to make money out of this with all of those penalties. But, I mean, the president, you said?
Money doesn't go to the data subject. Except it's the aside of the compensation, but the fine itself doesn't go to the data subject. It's a fine issued by the commission to the processor.
Oh, to the president, okay. So the president had promised to create about 1 million jobs in the digital economy. How does this feed into that?
Okay, like I said earlier, data is like gold now. People might need data. Businesses thrive because they have to process data or they're currently using data. So the fear of a lot of people using the internet or using applications is perhaps the fear of, okay, if I put my data up on the internet, what is the possibility I don't get spammed by calls or by messages or by emails? So it gives comfort to consumers knowing that, okay, they could use a particular platform and the data is secure. And that means more people using digital platforms. It means more businesses opening up. Also knowing that they as businesses, there are strict laws that govern the data space, and they won't just be held guilty randomly for data breaches that are not contained or enshrined in a specific and unified law. So that way you see that there are more businesses who will be more willing to go digital, and then there'll be more people willing to use those businesses. So it's basically like once there's more demand, more people using it, and there are more businesses coming into play.
Well, I do hope that the process will be made clean and transparent so people can actually trust the process and embrace it. Because having the law is actually one thing, which is what we have noticed in Nigeria, but implementing the law, making it work is another story. But anyway, thank you so much, Chizzy Oti, Associate of Strain and Blend Partners, for sharing your thoughts with us this morning, and enjoy the rest of your day. All right, now let's move to the markets. The NGX has been very reactive these days, from one height to a lot of profit taking. But let's get the details with Anitye Edet. Anitye has, yesterday was a red day, but we're still.
Good morning, Edie.
Yeah, good morning.
I think it's just as red as your jacket.
Oh, I didn't notice that.
But on Friday.
Yes.
Yeah. Well, but of course, there's no need to panic because the red figure that you saw for Thursday's trading session is as a result of profit taking. You know, because within the last...
That was early profit taking. Because before intraday, we had the points, the index points at over 60.
60, yes.
And then
60,000 level.
And just by intraday, it had dropped back to 59. That was really fast.
Well, the thing is, if I was an investor in that stock market, I definitely would do the same because...
You would not risk it. You don't know what's going to happen at the end of the close of trade.
Imagine making 13 billion naira in just 5 hours. And then, of course, you don't know what direction the market might tilt to. And then, of course, at the same time, you look at just within 15 days, over 3 trillion naira was gained at the market just within less than just about 2 weeks.
Oh,
of course, I'm sure you do the same.
A lot of people did not expect it coming. We did not know that the president the CBN will affirm the unification of the rates.
Exactly.
And we didn't know that the change would be that much. I think the banking sector surged about 26%.
More than 28%. That's the highest.
28% in one trading session.
In just one trading session.
That's huge.
That's the biggest so far I've ever seen in this
in the NGX,
So I'll be giving you that details, and of course our analyst will be giving us more details. He's been in the market for a very, very long time. Okay, so now take a look at your board there. The red figure that the red color that you see there, 430 billion naira loss. Loss, you might call it, but actually it's profit taking from this the market's total value. Like I mentioned earlier, over 3 trillion naira was gained in just 2 weeks. And then, of course, the market made a pullback from what we saw previously of 3.13% for midweek trading session, and then the other gain that we'd seen earlier in the week. And so far, the market's year-to-date performance has reduced all the way from 17.04% to about 15.5%. Month to date, we're still on a positive terrain, down from 7.6 to about 6.1%. So let's move over to the sectoral performance. It was broadly negative, as you can see there, but the lone gainer there, the lonely man there is the oil and gas counter, which was up by 12.12%. And this is coming a day when the National Bureau of Statistics released the May inflation data, which saw the inflation rates climbing to about 22.41%. So, of course, inflation has a way of coming into that market. Let's move over to the activity chart. We saw activity is mostly in the red, particularly when you look at the volume and the value of transactions carried out there. The likes of, we had 39 gainers, which was led by Sunu Assurances, and then we also had 36 losers led by Transcorp Hotel. Total volume, like I mentioned, was down by that amount, 9.8%. Now, to give us more perspective on that market, let's talk to Abayomi Obabulujo. He's an investment analyst as well as the publisher of StocksWatch. Thank you for joining us, Abayomi. Please, Abayomi, if you can hear me, kindly unmute your mic, please. Hello, Abayomi, can you hear me? Okay. So we'll get back to Abayomi. So like I mentioned, I said the total volume had declined by about 9.86%. Of course, we've seen this market so far, the 60,000 level. Currently, it's fell below the 60,000 level, but at a comfortable level of 59,000 points because we never envisaged that. Actually, before now, we were expecting that the market would make some retreat. Analysts had projected a choppy session, but the announcement of the central bank, the suspension of the central bank governor Godwin Emefiele over the weekend, just last weekend, and this is just about 6 days after, almost a week after that. So the market responded positively, as well as the body language of the government about the fiscal policy reset as well as some financial sector reforms coming into the market is what made the market to come into that positive territory. Now let's move over to the fixed income market where we see, well, okay, before that we see the top trades. UBA is still on the number one of the top trades, the major contributor to the total volume of transactions carried out on that stock market space. Let's move over to the fixed income market where we see bearish trading for the treasury bills market. This is for the FMDQ market. We saw the highest number of deals carried out there for the April 11th, 2024 paper, 37 deals, which is the major contributor to 45 number of deals. But for the Treasury bills market, the average yield there, it had expanded by 2 basis points to 6.3%. Across the curve, we saw the average yield expand at the short segment. It expanded by 12 basis points. And this comes on the back of sell pressure on the 91-day to maturity bill, which was up by 35 basis points. But it was flat at the mid segment and the long segment. Over to the bonds market segment. Next week, we will be having an FGN bond auction. And this is coming at the same time that the National Bureau of Statistics released the inflation figures. Of course, inflation is one thing to consider when you look at the fixed income market. So the fixed income for the bonds market, it was quiet proceedings there. And then we saw average yield there close at about 13.8%. Look at your board there, the 22nd of January 2026, 6 number of deals. And that was a major contributor to what you see here, 15 number of deals worth about 17.24 billion naira. Over to the open market operations, what you call the OMO. OMO was a little bit not much of activity there. On the 19th of March 2024 paper, 1 deal, and then at a discount of 7.25%. So, and that's it for that market. And then, of course, the final one there, the central bank special bills, which also had a bit of activity there. Now, let's get back to Abayomi to give us more details about the equities market. Thank you for joining us, Abayomi. Hello, Abayomi, can you hear me?
Bearish trading for the treasury bills market. This is for the FMDQ market. We saw the highest.
Hello, Abayomi, can you hear me?
April 11th, 2024 paper.
Okay, I think we're still having a bit of a challenge connecting to Abayomi. So for the OMO market, it was just this number of deals. And then, of course, we move over to the central bank special bills. This is what it turned out at the close of Thursday's trading session. 6 number of deals, and that was mostly contributed by the 28th of August 2023 paper, which is just about 2 months from now. So that's it for that market. Let's move over to the unlisted securities market. A bit of reprieve came for that market, and that's because we saw the likes of Central Securities Clearing System gain about 9.73%. So, and its securities price closed at 15.70 kobo. So that was why the market made a rebound from the 0.81% decline that we saw in midweek trading session, and that overshadowed the loss, 1.93% loss recorded by Friesland Campina Wamco Nigeria Limited. So that's it for that market. It has fallen all the way from the 1 trillion it's made a rebound back to the 1 trillion naira level, but it had seen some fluctuations, mostly on the downside of the fluctuation. Let's move over to the other side of that market. The volume, value, as well as the deals were down in contrast to what you had in the previous session. So more than 770,000 securities worth about 2.98 million naira. And then moving over to the top trades of that market, we saw, like I mentioned, the Central Securities Clearing System. And then, of course, we'll be looking at how that market turns out for the close of Friday's trading session. Your guess is as good as mine, Ini.
I don't have a guess at this time, unfortunately. I think Ladi will give us the lowdown of that by tomorrow during Capital Market.
Yeah.
Thank you so much, Anita.
Pleasure.
So let's move over to the other markets now, cryptocurrency, and see what's making up stories around there, how sentiment is. Let's look at the number, if we can have that number now. I do know that the issue of the US Binance, somewhat laid to rest, I don't know, but I do know that the US Binance had fired some of its staff members following that charges from SEC in the United States. Remember, Nigeria also, the SEC had come out to say, oh, Binance is illegal. But let's look at the market sentiments there. And that was 47, kind of neutral at this time. And the price of Bitcoin gained a bit, but still below what we have had before now 25,525.08. Ethereum is also up almost 2% at 1,670. BNB is also up. It's gaining, but we have seen better days than this, I guess. These are just marginal gains. Cardano also positive. XRP is, however, negative. Let's see the top gainers, the others. Yeah, there you go. The top gainers are double-digit gainers, mostly, or just two of them, KSC, SCX, and all of that looking, well, marginally good at this time. And let's see the top losers for the market for this morning. And there you have it. Well, it's a neutral market, so I guess we expect the numbers to be neither here nor there for this market. We see Matic there is down almost 0.5%. There, I don't know what investors are thinking of at this time or going into the weekend and how they want to react to this. But we have Solomon Amunde to summarize the week for us, and then we have this issue of the USDT, the PEGI. But hi, Solomon. Good morning.
Good morning, Amy. Good morning.
Yeah. How would you summarize this week? It seems so boring.
Yeah, actually, we had a little bit of high volatility yesterday in the market and in the early hours of the morning, where we saw Bitcoin dump down to about $48,780. And that was a very, very critical moment, and that meant a lot for the whole market structure. But before the close of yesterday, we saw Bitcoin reclaim $25,000, which was really, really refreshing for traders because it meant that the structure was still in place. And it's possible for us to still see Bitcoin go back above $27,000 within the next few days. But currently now, we're still waiting for the close of this week to know if we're going further down to about $21,000 or if we'll be going back up to about $27,000, $28,000. So it's been an amazing week.
So there's also this issue about, or before we go there, so this weekend, do you expect there to be maybe more movement? Or is just the 21,000 that we're looking at?
Okay, so basically this week, I'm still expecting Bitcoin to consolidate a little bit further at around 25K range. I'm expecting 25K to hold up until next week, Monday. But failure to hold, you would definitely see less than 25K. We're looking at around 23, 22K next week if 25K fails to hold by the close of Sunday this weekend.
All right, so what's this talk about USDT, the PEGI? What's that about?
Yeah, so based on yesterday's sell pressure, we had most of the whales trying to manipulate the market and dumping their USDT tokens. In fact, we saw some huge whale movements yesterday where we saw a certain whale that actually went to Aave and used USDC to borrow USDT, and afterwards moved it to about Coinbase and some other exchanges and was massively dumping USDT. So it was more like a coordinated attack on USDT to force it down and make it depeg, thus causing arbitrage opportunities for other traders to come in and try and buy back USDT and create a kind of like price correlation where we have one USDT back to $1. So that's what basically happened yesterday, and so many persons made big profits from it based on the arbitrage opportunities.
So is it over? Is it over? Solomon, can you hear me?
Yeah, I can hear you. Can you hear me?
Yeah, I can hear you. I was asking if the depegging is over now. People have made profits. Can we move on, or is it an ongoing action?
Right now, the depegging is over. We have one USDT back to $1. So it's over. But you can't really say, once we have a very steep movement in the market towards the downside, it's sure to expect something like this still happening again. But one thing I'm certain of is USDT would always find its way back to $1. because we can't afford to have USDT depeg right now. The crypto markets can't really afford it. It will massively crash the markets because USDT accounts for about 70% of the liquidity in the market, with a total value of over $70 billion. So sincerely, we really can't afford to have it depegged and stay depegged currently. It's not favorable for the market, and it's not good for the crypto and blockchain ecosystem.
So please help me to understand. This market is decentralized, and people are asking, oh, who's supposed to be regulating? But then you can have investors come together and put, such an action, and then we see the impact on the markets like this USDT depegging. What does it tell us about crypto generally?
Yeah, so the thing there is crypto is quite broad and quite vast. We have the centralized angle and we have the decentralized angle. So in as much as we have centralized exchanges that make it very, very easy to onboard new users and Web2 users to the Web3 space so that they can be able to interact with these assets. At the same time, we still have the ETFs, which is designed to help traditional investors that would not want to go through centralized exchanges to be exposed to these crypto assets, thus packaging them as securities. The same way we have the very decentralized world where everything is happening on chain. So now when you look at how most of this depegging happens and most of these coordinated attacks, most times it comes from the decentralized environment, because that's where you can very rarely track these things. So that's why it's almost like crypto is so exposed to these external attacks. It's because of its decentralized nature. And also it's still the decentralized nature that makes it very, very interesting at the end of the day.
And make it for risk takers to be able to settle in there. But I mean, just before I let you go, we know that at the beginning of the week, or was it towards the end of last week, SEC had said that Binance is illegal. Did that make any change? Is that affecting traders in Nigeria or Nigerians at all?
In a great deal, it affected lots of retail traders, because I had lots of traders that reached out to me. And they were panicking so much about what they should do and if they should move their funds out of Binance, if it was safe or not. So I would say, speaking for the retail traders, so many persons that have very little access to this information were really affected. And we also have a large chunk of people that just make use of Binance to receive funds for job done, maybe a freelancing job, and also they just use Binance for P2P transactions. Most of them were really, really affected by this. And some persons actually lost funds based on that announcement about the banning of Binance in Nigeria. So it had a limited effect on retail traders, sincerely speaking. But for OG traders that understand this, and we've seen this happen over the years, we were not really fazed by the announcements. So that's just how it played out at the end of the day.
But now that the 2022 finance bill recognizes and even has it there that the cryptocurrency transactions will be taxed, do you see sentiments changing from the government side, that is?
To be sincere, I believe we would find a common ground between stakeholders and exchanges that are operating in Nigeria and other countries. They'll be able to find a common ground where they can be able to work with the government and be able to render their services to the users, because by the end of the day, I believe the government is there to serve the interests of the users and also to protect the users. And I also believe too that the other stakeholders and the service providers too wouldn't want to do anything to jeopardize that. So at the end of the day, both parties will obviously and definitely collaborate to see how they can be able to serve the masses. That's what I 100% believe. It might take some time and some back and forth negotiation, but at the end of the day, I believe that's what will come to.
All right, Solomon Amunde, financial market analyst. Thank you so much for your time and have a great weekend.
Thank you very much, Amy.
Well, that's it on the program today. Thank you so much for being a part of this 55 minutes of current and relevant business conversations. I hope it was worth your time. I'll be back at 1:30 to give you an update from the world of business. Laddie Williams will be here 7 p.m. tomorrow. Capital Market. You want to know how the market ended and how the sentiments of the week can be summarized? You get that at 7 p.m. tomorrow with Laddie Williams. But I'll see you at 1:30. Let's do this again. I'm John Mekwa.